Just as a disclaimer, I have another company which is an investment advisory firm, an RIA. It's registered to the teeth, and that's an investment advisory firm. So that's more investment and advisory focused as opposed to really quick trading focused. So just quickly on that, I really believe everyone should first and foremost have a diversified portfolio and then trade with maybe some of your money. Let me just, as a disclaimer, say that that's core one of my core beliefs. Um, on the trading front, which of course we do, um, I'm going to consider trading to be more of a, you know, very near term, might be a couple of days, um, still very near term, maybe a few weeks, and then maybe a few months. But in essence, I think we have to be prepared for potentially one more rally on the equity side. And I don't know what you think about this, AJ, but the channel checks and the hedge funds and all the guys I speak with that I used to either work with or still work with, um, there is the threat of one more rally in equities if we start to get one really good inflation report, meaning, or something that basically speaks to the economy slowing. Because I think there's still too many options positions and, structured products. And we can talk about that if you guys want to, what that means from an options flow perspective. But there's a lot of natural option sellers out there that are suppressing volatility. And I'm an option seller as well. Um, to some extent, but I'll only do that to the extent that it makes sense against the grain. So, in other words, what if we get, let's say, some sort of report that says the economy is going, you know, uh, down the tubes, let's say, um, and what would then happen to bonds? Well, bonds will probably rally, yields go lower, and the question is, and I think this is really what everyone's thinking about that I'm talking to, is would that lead us to one more equity rally and bring the last hope back in, and then we're done?